right. What is up, YouTube? What's up, friends and family? What's up, new subscribers? So every week I'm going to be doing this portfolio recap just to kind of show you overall performance, show you what I made from which fund, how much options premium I was able to collect throughout the week from different positions, and give you kind of a overall macro environment of the market and how things are looking on the upcoming week. So this is Snowball Analytics. I really like the way that the data is presented here. You can easily port your portfolio over as well to show all the metrics, all your holdings. It does a pretty darn good job. It's not perfect, but it does pretty good. Especially for something like this, if you're just trying to track over time, it does make everything very easily viewable in all these pretty colors. So let's dive in. So right now, the current portfolio value is up to 66,000. You can see total profit, passive income right around 40%, which is kind of my goal. I try to stay right around 40%. You can definitely get higher with some of these high yield funds. I don't necessarily think it's the safest or the most sustainable option. I definitely had a higher yield earlier on when I started this portfolio, but it was super volatile, which is not necessarily a problem unless it just isn't meeting your investment objectives, right? If you don't want to have to watch your portfolio swing up and down, then it's better to have a little less passive income from your dividends, the high yielders, and use more growth, use more closed-end funds, use more, steady anchors, if you will. So let's go over to analytics here so you can see more of a robust view of what's going on. So if you come down here, you can see all my positions, holdings. You can see how much is allocated into each one, total profit, IRR. This is investment or internal return rate, which is just another fun metric that's fun to track. I mean, mine right now is sitting at like 120%. So it's pretty high as far as that specific metric is concerned. Chippy, I really like this one a lot. It's performed great this year. I've got a decent size position in Chippy. It's almost 10%. Well, I guess you can see right there, share and portfolio. It's about 8%. Cornerstone, I've got the CLM, CRF. These are the bigger positions that I hold for closed-end funds that are more the anchors of my portfolio. They really help hold everything together, especially when the market is up and down like it's been. But as you can see, I've got a really, really great, not only, and this is the position I'm trying to get up to closer to like 40%. I've got 10% in each, but essentially once I get down the road here a little bit further, it'll be 20% in each of those. Then I've got Granite shares, this yield boost Hood ETF. So one, I'm super bullish on Hood as it is. The reason why I have this one instead of some of the other ones that are offered by Granite shares is simply just because this one's low margin maintenance. It's 50%. A lot of their funds are 100%. You can only have so much of those 100% margin maintenance funds in your portfolio if you are living out of your brokerage. You don't want to eat into your equity too far and take up a lot of that buffer that you can have on a downturning market. Curve, I've actually been pretty impressed with this one so far. It hasn't been able to get back up to inception price yet. It's close, $23.91. It launched at $25. I got in shortly after. It's almost back up to 24. It's doing pretty good, honestly, especially with how the market has been around the time I got in. So I've got almost a 10% position in this one. As you can see, it's got almost about that 40% yield, which is what I really like. And then OARC, this is probably my favorite, if I'm being honest. I really love this, not only just because I really like the underlyings that Kathy Wood chooses in the ARC investment fund. This one has just performed really well since I've had it. I mean, as you can see, this is a little inflated. I am not up 25,000%. There was a forward split in this stock. I'm sorry, reverse split. So they combined smaller shares to make bigger ones. So it makes it look like I've just, made money hand over fist here, which I have, but not to this degree. Not to this degree. So if you come down a little further, SARC, this is the hedge for OARC. It's a very small position. You've probably seen my other videos, so I'm not going to get too far into the hedges. I keep those small, very small. I mean, as you can see, this is a 1.5% position against this one that's almost 10%. So not big at all. Salty, this is an inverse ETF, or I shouldn't say inverse. It's actually more of like a bearish short option income ETF. So it's not, again, it's a smaller position too, 3%, nothing crazy, but it pays a really good dividend. As you can see, it yields about almost a 64%. So for something that's meant to be a hedge, it actually does really well. SoFi, I've got 200 shares of this now. This is actually contributing quite a bit to like my other passive income because I'm just selling calls against it every week. Pro shares short. This is an inverse. So this is a very small position. It's a 1% position too. Another inverse, right? This is pro shares ultra short triple Q. And then you've got the triple Q, or I'm sorry, TQQQ. This is the triple ETF on the NASDAQ. This one's just great for growth because again, it's based off the index, which obviously is going to move up over time, and you get triple what it does over time. And I am also selling calls against it. So not only do I have this awesome capital appreciation here, but I'm getting options premium on it every week. Ulti, this one, same thing. This one did a reverse split. So it looks, again, it's a little inflated. It's not really. It has not performed that well for me. It's done good. I mean, as you can see, it's got a great yield. It's got like a 76% yield, but it is not, it's not up 700%, whatever it says here. But let's jump over into this next screen because this shows things a little bit. So just a quick look at my diversification. Again, this is not perfect. It's getting there. Because again, the Cornerstone funds, these are going to be my biggest. And everything else, kind of more like a satellite system, if you will, of having those core holdings. And then everything else is just built around it. But again, I try to keep things into 3 buckets where I've got the closed-end funds, and then the high yield dividend ETFs, and then stocks that I own for growth that I sell options against. So again, just a quick little view here of what that looks like. So dividends, okay. This is what y'all been waiting for. I'm sorry for making you wait, sit on the edge of your seat. So this is what we're currently sitting at for the portfolio. As you can see, annually, you're sitting right around almost 26,000. It's a little over 2,000 a month, which is a really great place to begin. 40% yield is fantastic. I'm very happy with that. These are the highest yielders ranked from first to last, as you can see. So you've got HOYY from Granite Shares, followed by Winter. And I'm sorry, I didn't show this on the previous screen. That is a short option ETF against MSTR. I just keep it because, well, one, it's MSTR has been down for quite a while, but I actually use it more of a hedge on Bitcoin than I do anything else. Because the only Bitcoin exposure I have currently is BitX. And that's because it pays an awesome dividend and it has great options premium. So you can sell options against it and make really good premium. Not all these ETFs that pay dividends are going to pay really good options premiums, but BitX for some reason does. So I'm not complaining. OARC, Ulti, you can move your way just down the list this way. So what did I make this last week? That's kind of what the whole point of this video is anyways. But what I made this last week was $731 from high yield dividends. So it was a great week for the portfolio. The market bounced back a little bit, and so that contributed to that upside. And then in just options premium sold, I made $345.16. So about $1,000 total for the week, which is right where I want to be. That's essentially a 2.7% return on my portfolio for the week. So again, if you compound that over the month or even annually, it's exactly where I want to be. So I will continue utilizing the strategy that I currently have because it's working great. And as you can see, it's helping me meet my goals. In fact, if you come down here and you look at how my portfolio is doing compared to the S&P 500, I'm ahead by 2.5%, beating the S&P 500, which is fantastic. That's kind of the goal, right? I really like to stay right in between the S&P 500 and the Nasdaq, because the Nasdaq usually does a little bit better in terms of performance, just because that's where all the high beta stocks are, the tech stocks. So yeah, I'm super happy. This is working out great with the current allocations, the way everything's structured and set up. Really looking forward to this week. Today was off to a good start. The market was at I think it was down. Well, the NASDAQ was down 0.11%. We were up 0.15%, kind of right where I want to be, beating the market. So if you have any questions, please leave them down in the comments for me. Let's start a conversation. Let me know what your favorite high yield ETFs are, what your favorite stocks to hold, sell options against are. Leave me a like, share, subscribe, and I will keep releasing these out. And I'll have more videos to come in the future with getting into more of the education piece so that you have plenty to learn. And I appreciate you watching.